Hi, everybody. This is Todd with the daily video. Um, we are at the end of another week here, guys, and it's been not that exciting, but sometimes that's okay when the markets are less um, volatile and maybe a little bit more deliberate in their movements for a change. Um, One of the things that I've gotten some questions on, I want to address a little bit more in detail this concept when we talk about the LL3 or the HH3. Now, um, you should understand what we're talking about here in the time in when dealing with the actual entry here. So this is going to help us know when to actually get into the trade. Now, the first thing that we look at with the simple trading method is the trend. So if the trend is moving up, we're going to be looking for the HH3, so the highest high of the last three. If it's in a downtrend, we're going to then look at the lowest low of the last three. So the first thing we have to identify is whether it's moving up or the trend is moving down. Second thing that we want to look at is support or resistance. And if it's in an uptrend, we want to see it pull back to support. If it's in a downtrend, we want to see it pull back to resistance, and then move either to the LL3 or the HH3 for the actual entry. And so if we understand that, then we'll know when to actually get into the trade. So this is an example of the HH3, the highest high of the last three. Now, in this case, we'd be looking at this as an uptrend, and we get a little bit of a pullback. This is going to be some support down here in this area. Now, one of the important things to know is that we're looking for closed candles. So the closed candle. Now, I have in here just the candle. Now, if this had a wick here, then the entry would have been up into here. Or if the wick would have been here on this one, the entry would have been right there. So the highest high is including not only the body, but the wicks on there. Maybe the highest high was right here. In that case, we would not have entered into the trade as of yet. But with our example here, we're going to say that the highest high was this number 3. And so our entry into this is going to be with a, whoops, let me get my drawer here, a buy stop entry. So we'll put the price in, and as this starts to move up, as soon as it gets to our buy stop price, we're going to get filled on this. We're going to put our stop, initial stop here, just below the most recent swing low there. All right. Let's take a look at an example here. In this case, you can see that we have an uptrend. We're pulling back. I'm going to call some support in here. 1, 2, 3. The highest high is right here. Buy stop. And we get into this. Not yet, but as soon as that moves up, we're going to get into that for a long entry. Lowest low of the last 3. Same idea here. The trend has been moving down. We get a little bit of a pullback up to resistance. And as this comes back down, we're going to get in at the lowest low of the last 3. And again, if the lowest low of the last 3 was all the way down here, and that was a wick, we wouldn't quite be in this yet. But with our low being right here, we would, in this case, not put a buy stop, but we would put a sell stop in here. And hopefully, you can see how that works. This would be our initial stop up above the most recent high. Here's an example of this where the price has moved down. A little bit of a pullback here to some type of a resistance. And then the lowest low of the last three, we'd enter here on a sell stop. Initial stop is going to be just up above that there. All right, so that's kind of what I wanted to cover today. Have a great weekend, everybody. We'll be back on Monday to look for some additional trade setups and answer any questions that might arise. So have a fantastic weekend, and we'll talk to everybody next week.